think about the original purpose of a stock market, you kind of walk it back over time, there used to be people involved directly with one another. It was either investors trying to move money from their own personal account and give it to a company to find returns and bring returns back to their portfolios. That evolved over time quite significantly, but the model that typically comes to people's heads is the old school trading floors where people are screaming and yelling, lots of noise, trying to buy and sell shares from traders. You look at the tools that were involved historically. You had phone lines that were attached to that business for the longest time. The typical stockbroker on the phone all day trying to buy or sell shares. There was a lot of old technology in place then, and I'll use the word technology lightly perhaps, printers. We talk about phone lines, people. It was a people business for forever. Stock markets were really a designated place where those people could meet to trade.
Before, you would have had a bank who would have offered you a GIC. That's easy. They make GICs, or they offer them, and they offer them to you. That's a very closed ecosystem. You would have had stockbrokers. Stockbrokers would have said, I'm going to deal with you. I have a particular basket of stocks that I think make sense for you. So who would they have to interact with? Their firm would have to interact with the stock exchange. The stock exchange would have to interact with the depository, the Canadian Depository for Securities in Canada's case, where all of those securities are held, or a custodian internationally if those securities are held elsewhere. And so those constituents, right, are key to how that the market used to operate.
When we want to look at how investors accessed money, I think a great parallel to draw is also how did they access information. And if we look back a few years back, the information and the product would have been all with the fund manufacturers and the product manufacturers. We were the one that had access to the tools and the information and the market data. So the end investor would have possibly waited for the mutual fund quotes being published in the newspaper, or access via the advisor to come to the fund company to get access to the information. And the questions would have been, what is my product? What do I hold? What's the performance? What are the markets at? If you fast forward with development of technology, then this got transferred into the hands of the distributors and the financial advisors. They then had access to more tools, more information. They were able to produce models and portfolios and build more analytics. So now they were able to work a little bit more directly with the client, and they came to the fund manufacturer for different needs and different purposes. And if you keep following the value chain and you progress in time, then we're now in an era where the client has access to all the information.
I think 15 or 20 years is a very interesting time frame to consider. 2007 saw actually the final removal of a human trader-based market here in Canada. So we went fully electronic as a country into the stock markets in 2007. What that meant was people were no longer involved in the actual transaction of shares. It was all done by computers and technology in various stages. But that core change as a stock market, moving from people-based trading to electronic, is what's also facilitated a lot of development and improvements in the overall kind of ability to reach the end client, the end investor, with new and interesting technology.
At the end of the day, the client wants to know, am I okay? Do you understand the complexity of my financial affairs and help me get to where I want to be, help me meet my goals? For some, they will be best served by traditional financial advice that will still be continued to be augmented by technology. So technology will also play a role in the traditional advice, providing better insights, providing better portfolios, providing better tools. And it will also allow for a new path for other clients to be directly involved with their investments. So at the end of the day, this will not be, the video that killed the radio star. There will still be options, there will still be choices to meet the demand of different client segments.
Now you're seeing the advent of new products, right? Exchange traded funds, what are they? They used to be products that were the advent of the institutional investor, which is, I'm the institutional investor, I have hundreds of millions of dollars to invest, investment managers would create something special for me, which is a way to get access to investments around the world at a very, very, very low cost, right? And so ETFs then moved, like investment management did, from an institutional context into a more retail context. And now, as you would see, right, ETFs are now available through stockbrokers and through investment advisors, and in some cases through investment managers, right, to retail investors. And they provide a low-cost access to a very specific type of investing.
You look at the intermediaries that are at play in this business, you have three major parties: retail, do-it-yourself type investors, or they're financial advisors that work for banks or do-it-yourself type institutions. That service would not have existed in its traditional form because the technology wasn't there. As those capabilities have evolved, as the markets have gone electronic, it's also provided tools for those firms to improve the experience for their clients. You now have web pages, digital portals. You can trade on your phone while you're in transit. Those are things that fundamentally didn't exist 15 years ago. For companies, ultimately, they're getting a more efficient way to go and raise capital from investors of any type. They can tap the market once, come to an exchange, and they can ultimately choose and solicit business from other clients, whether it's pension plans, asset managers, retail investors. We're giving them options. The theme that I would kind of take away from all of this, it's about bridging worlds together, bringing capital markets, trading, wealth management, and knowledge of your client into one single realm that they can get everything done in one place.
Technology is changing, consumer behavior is changing, buyer behavior is changing, and you have demographics, right? The move to the baby boomers retiring, and succession planning and wealth transfer to their children. When you mix all of those things together, what happens? Well, let's see. You have an increasing populace of technology savvy, younger investors becoming professionals who expect instant gratification via the web or via a mobile device. You have an older demographic who characteristically expects face-to-face, trusted advice on a limited set of offerings and wants proof before they will give you trust. The two are clashing. Advisors, so those intermediaries that need to deliver services, they have to now cater to both.
Who will have a key role 10 years ahead? It will be the firms that understand two things, that understand data and people. And it will be the firms who marry the data and people the best that will have a dominant role in the industry. And by that I mean, it is no longer about the product is the commodity, the product is the table stake. It is about the value that you bring to the client. But if you look underneath, it is a very complex thing to achieve. How do you define value? How do you deliver value? How do you deliver value for different client segments? Value is a personalized thing to me as a consumer. So technology, 10 years forward, will play a key role in that, in understanding what are the value drivers for each individuals, and how can we marry that data that we get on all of the participants and combine that with financial products and financial services. And those firms that marry that the best will have a dominant role.
Looking further ahead, say 5-10 years in the future, ultimately I believe the role of a stock exchange at its core will remain principally the same. It's about connecting investors and companies, people who have money with people who need money together. What that looks like from a technology capabilities perspective could definitely go through a couple shifts and quantum leaps. We see things change dramatically in the span of the last 10 years. I think the next 10 won't be any different. Where I think we're going to see a focus in the business is on data, bridging worlds, bringing ideas together, and having the intelligence attached to glue that data together into a way that will make sense for the investing public.